Hey guys, so today we're just going to be talking about support and resistance and what that is and how to use it to make some money. So what does support and resistance mean? So support and resistance are areas on a chart where price has historically reversed. So if we're just looking at this example here, you can see on the left hand side where price made a top, made a bottom, and the bottom was tested a second time. It held. So on the second bounce, you could have bought there, rode it up all the way back to the top that we knew existed, profited, and even entered puts at that point as it fell to make money. So I'm going to walk you guys through a few examples of what this looks like on actual charts so that you guys can learn to do it yourself and start to make some money. All right, so this is a 1 year chart of the SPY S&P ETF. Now, what we try to do when we're using support and resistance or trading on support and resistance is we try to identify these price levels where, as we saw, price reverse. So what we do, we're going to add a drawing and we're going to try to find an area, like say right here on the chart, where we have multiple touches where price was rejected. And then now we're also going to be looking for areas on the chart where we have some support. So over here, this is more rejection, but then over here it turns into support. So it's support and resistance. We can do this on all kinds of time frames, and it's important to do it on many different time frames. So if that's just a minute ago we were looking at the daily chart. Okay, so daily levels tend to be very strong or stronger than these lower time frames like the 5 minute, 15, 30, 1 hour, 4 hour. But if we look how this played out on, say, the 4 hour chart, you can see pretty clearly that those levels acted as support and resistance. Support and resistance. Now, if we're looking at these lower time frames, we also want to see on this lower time frame, the more extreme, like here, we had some resistance, same as resistance, but now it's support. And when you start to see these things play out, you can identify entries and exits. So, here we know that there's trouble, right? We know that if you're in calls and this price hits, maybe you want to get out. Maybe you want to take that profit. Even true over here, just because it went higher didn't mean you had to hold. You could have locked in some profit and got back in, right? So when we're looking at lower time frames and we have these levels in place and we see a bounce, that's an entry signal. That's a buy signal. Or if we see rejection here, that's a sell signal, or buy puts. You could write that down thinking that as long as we stayed under this line, we would come down here. I mean, that didn't happen, but you could have locked in some profit. But if you didn't, when we retook this level, you could have stopped yourself out, gotten calls, and had a nice ride up. So as I mentioned in my technical analysis video, there are many different types of support and resistance. There are price level support and resistance like this, and there are support and resistance like moving averages. So on my charts here, this is my daily chart. So this is what I use to look at the higher time frames. On my higher time frames, I like the 50, the 100, and the 200 moving average. I think those are pretty important. And I also like my 8 and 21 moving averages, because these tell me more of the short-term trends. So I think of my 8 moving average as, if we're holding it as support, we're on a strong uptrend. If we're holding it as support, we're on a strong uptrend. And I try to think of my 21 moving average, although this is not the greatest chart. Well, it's not true. I think of my 21 moving average as pullback support. So now that we're going down, strong downtrend support is the 8 moving average, and pullback support is our 21. These are exponential moving averages, sorry, and these are simple, exponential. So pullback support is the 21, and you can see this was a buy zone for puts, and you could have written puts down again. As long as we did not close above that 21, you knew that the downtrend was intact. As long as we don't close below this 21, the uptrend that we're currently on is intact. But if it's going to remain very strong, we want to stay above the 8. So again, there are many different types of moving averages. Other people use Bollinger Bands. Fibonacci are very important to me. But if you learn how to utilize these tools and these moving averages to identify these price levels where price has reversed historically, you will learn to identify highly profitable setups. All right, guys, well, that was just a quick walkthrough of what support and resistance is, and I hope it helps you guys make some money. Everybody have a good day.